Hello again, welcome to another episode of the Uranium Market Minute. Today is Thursday, July 7th, and this is episode number 148. My name is Justin Huhn. I am your host and the founder and publisher of the Uranium Insider Pro Newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. As always, nothing that you see or hear in this podcast is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing and always take responsibility for your own choices. All right. Welcome back. Had a pretty good day in the markets today overall, and the uranium stocks did quite well. A number of them were up 8, 9, 10% on the day, even though we're back at levels not seen since last week. Really not a huge breakout, but either way, it sure feels good and they stop hitting you in the head with a hammer. So nice to see at least some green across the screen. In fact, portfolio wide was a very, very strong day. So good to see a little bit of relief there. We'll look at the charts in just a moment. The mailbag section, I want to talk about an interview that was done with Paul Ma of CGN Mining. And this was done by Bloor Street Capital, James Connor. I'm going to put a link in the description of the show. I suggest that you watch it, at least watch the first half of it, because it gives a lot of detail about China's nuclear plans and their build out. I apologize. I still have a bit of a cold and a little bit of a residual kind of throat raspiness. So bear with me here. Before we get into the rest of that, why don't we go ahead and jump into the daily scoreboard here. Spot price uranium slipping slightly, 48.13 a pound, with the spot trust trading up 1 or 2% on the day. We'll see just a minute. I don't recall where it closed on the day. Closed yesterday at a negative 14.48% discount to their net asset value prior to the previous day of minus 19%. That was a pretty big move back towards NAV yesterday. That primarily had to do with the spot price slipping. But today, with the spot price slipping another 12 cents and the spot trust trading up, we're probably more around a 10% discount to NAV. Historically still relatively large, but hey, at least we chopped it in half in 2 days. That's pretty good to see. Obviously, they did not raise any new cash. They did not buy any pounds either, so they're still sitting on 65.2 million in cash. They've been holding that amount of cash since they last purchased. I think it's been close to 2 weeks since that happened. Turning to the ETFs, URA nor URNM had any changes to their outstanding share count. I have a feeling that tomorrow's reporting will show some redemptions from probably at least from URA from Tuesday's trading. We had that pretty big volume sell-off day that's pretty nasty across the sector. It had the feeling of ETF selling. So very curious to see what those numbers come in probably tomorrow. There's a lag for both of these reporting, so we'll have to see about that. Let's take a look at the charts. URA trading up nicely today, up almost 6% on the day, closing right darn near the highs of the day. That's a pretty good sign. It's been a while since we've seen that. And the volume was respectable. Not huge, not breakout volume, but it was above average volume, at least looking at a 10-day average. Good to see that. Still, obviously, in the short term, we're looking at a very bearish chart here. That nice move came off of that positive RSI divergence. So we'll see if we have some follow through. Obviously, we want to see follow through. If we see some risk coming back on the markets, there's a lot of speculation about next week's CPI. I think the market is expecting it to come in lower. Possibly the Fed might slow down with the rate hikes. This is all speculation. That's what everybody's betting on in terms of the broad markets being back to risk on. And it's interesting. I was chatting with somebody today on Twitter, and I was just telling him that I haven't had the feeling that we've really seen panicked, super fearful capitulation in the uranium sector. The sell-off has been pretty precipitous, but we haven't seen huge volume selling that we see typically in a very fearful capitulation type situation. We have not seen that. But if you look at other sectors, and even with that said, we've seen the AUM of the ETFs sell off by more than $1 billion since the highs just in April. Since the highs in April were down 30-35% since April. So it's been a big sell-off in the uranium sector. But if we look at other sectors, we're talking about $35 trillion wiped out this year. We've seen the tech sector just get eviscerated. We've seen huge mega cap tech stocks down massively this year. We've seen a huge wipeout in crypto. So it's not like we haven't seen a major setback to kind of the overall wealth effect in the markets. We absolutely have. Either way, what I would like to see here in the sector technically speaking, would be a basing pattern. I'd like to see us move sideways for a bit here. I don't like V-shaped recoveries. I mean, generally speaking, when that happens, they aren't sustainable, with some exceptions. Obviously, with March 2020, that V-shaped recovery did sustain for quite some time, largely assisted by QE. But I would love to see some basing here, some sideways movement, and some accumulation. I'd like to see some accumulation. Now, I do think that there has been a mild amount of accumulation over the past couple of months. I think that there has been some smart money positioning. In fact, I know there has been, because I've been speaking with that smart money, and they have all been relatively aggressive on the buy side. That doesn't mean we can't go lower, of course, but either way, I would like to see this chart recover, move sideways, have those moving averages start to flatten out, and we create a base, a place where we can move up from more sustainably, rather than a short-term blast off in a V-shaped recovery where everybody questions, is this sustainable or not? Those longer-term basing periods tend to give rise to a longer-term breakout period to the upside. Cameco also had a pretty good day, up 6.61% on the day. Didn't close near the highs, not breakout volumes for Cameco, but we could be looking at a little bit of a double bottom here. That obviously would be a good thing to see. Got rejected right at its dropping 20-day moving average. Even the 200-day for Cameco is moving down. Still a short-term bearish chart for Cameco, and it's probably the best looking chart in the space. Sprott Physical Uranium Trust traded up 3% on the day, and with spot price falling, so we are probably right around that 10 or 11% discount to NAV. Still quite a ways to go. Still, we're making some higher lows here as we move sideways for the past 3 weeks or so with rising RSI. This chart is starting to shape up a little bit. Looks like it's building on a move. Hopefully that move is in the direction we all want it to be in. Let's take a look at NextGen. This is another large cap in the uranium space, and this one has been particularly brutalized over the past few weeks, past few months, actually. My theory on this one is, along with Cameco, along with Denison, and some other large caps in the space, these are more likely to be held by funds, and a lot of funds saw redemptions in the second quarter due to the underperformance of the markets in general. Having some level of investor panic, obviously not capitulation levels, but when investors want their money back, the fund's not sitting on that cash, they got to sell what they hold. And I think that some of these large caps have been held by these funds, but this also another one of very, very obvious positive divergence in the relative strength. Nice day today, up almost 10% on the day. Still, where's the volume? Volume's not there. Obviously today with a 10% move on less than average, if not maybe average volume, the sellers might just be getting tired here. We've been in a volatile, mostly down moving market for months here, and possibly we're seeing some seller exhaustion. So it doesn't take a whole lot of buying to produce these large moves to the upside. This also could be a double bottom pattern here. We'll need to see if we follow through. I would like to see it break above this $4.10 level for NextGen. Let's look briefly at the URA relative to the S&P. This one definitely could be in the category of making an undercut low with this trend line. Long term, of course, we continue to outperform if we're zooming out. And if we really zoom out and look at the weekly chart of this, which I really enjoy doing, this gives me a long-term perspective of just where we could go with this and how early we really are in this trend. But looking at the daily chart, we did break below that trend line, brought back up above the trend line here, and would like to see some continuation and outperformance relative to the S&P going forward. All right, mailbag section. So I wanted to talk about, like I mentioned at the front end of this podcast, there's an interview done by James Connor from Bloor Street Capital. He interviewed Paul Ma from CGN Mining. CGN Mining is a Chinese state-owned corporation, and they have a number of operations globally. They have a JV, the Orlik project in Kazakhstan, with that mine is expanding in the next few years. He did talk about that in the interview, but there was a lot of very interesting data at the front end of that interview that really put some perspective on just how industrious China can be when they set their goals to something. So I'm going to give you a couple of interesting data points from the beginning of that interview, just in case you don't actually watch it. These are kind of my takeaways that I thought were noteworthy. about China's nuclear plans and their current build out. So China has 54 reactors operating. They're the third largest nuclear energy producing country in the world, behind France and the United States. They have 19 reactors under construction right now. That is 1/3 of the global reactors under construction. So the global build outs that are happening right now, what is that? That's 57 reactors roughly. I think there's a few less than that, 56 maybe. They have 1/3 of the world's current build outs of nuclear power plants. 19 reactors under construction. There have been 20 new units approved since 2019 and 6 approved in the last 12 months. And these are projects, the 6 that are approved in the last 12 months, they haven't broken ground yet. They haven't poured first concrete, but you can see that those approvals are in line with their 5-year plan, their latest 5-year plan. And what is that latest 5-year plan? 70 gigawatts by 2025. And they're currently right around 54 gigawatts, 55 gigawatts, maybe a couple less than that, low 50s. Essentially, what does that mean? 54 reactors operating. To get to 70 gigawatts, that's another 16 reactors connected to the grid in the next 2.5 years. Chinese are going all out in nuclear right now. This was a really interesting data point. Of their 54 reactors that are currently operating, 41 of them are less than 10 years old. That is how they've built 41 reactors in the last 10 years. That is how ambitious they have been about nuclear in this past decade and going forward. They know the benefits of nuclear from an industrial standpoint, from a baseload standpoint, from a growth perspective for their country. And obviously, they have unbelievable pollution problems. There's still, the last I heard, they're building a new coal power plant every week or two in China. So eventually they want to get off of that. And for now, the best way they can do that is to add nuclear as fast as they can. So that's their goal, 70 gigawatts by 2025. That's 16 reactors in 2.5 years. What is their goal by 2035? 200 gigawatts by 2035 is China's goal. That is a huge, huge expansion. That is 140 plus new reactors in the next 13 years, next 12 years. Just phenomenal, the goals that they're setting right now. And I tell you what, they are on pace to meet that. If this pace continues, they are on pace to meet that goal. So I wanted to share those with you because, that's really kind of a big part of the thesis, right? Especially on the demand side going forward. Now, the Chinese buildouts don't really move the needle in the short term. And even if they slow down their buildouts, that wouldn't necessarily change the short-term thesis, even potentially the midterm thesis. We do expect the Chinese to continue buying. I talked about this contract that was signed. Now, this is between two Chinese state-owned corporations, between CGN Mining and CGNC. And but that contract was for 2023 to 2025 at $62 a pound fixed and 60% reference to the market. So we're seeing the prices rise. We're seeing this is going to be the first real strong year in long-term contracting that has slowed down since the beginning of the year, but still we're sitting at 70 million pounds contracted to U3O8 this year so far, 6 months into the year. We're going to break over 100 million pounds this year. And that'll be the first year in long-term contracting, more than 100 million pounds since 2012. This is the beginning of the contracting cycle. I always hate it when I hear, when are the utilities going to step up? When are they going to step up? They're always contracting. They've been signing shorter term contracts and carry trades over the past many years, and the long-term contracts are happening. Now, right now, the utilities are focused on securing conversion and enrichment, but going forward, that U3O8 contracting volume is going to increase. So I do fully expect us to break through that 100 million pound level this year. And I do expect higher prices by the end of the year in U3O8. And interestingly enough, we could see the movement in conversion and enrichment catch up to the U3O8 market right around a time, perhaps, where we see risk come back onto the markets. Now, that could be honestly as soon as next week or the week after. Depends on how the Fed reacts to the CPI. We're already hearing some leaks. I believe it was from Bullard that basically said the Fed would consider lowering rates if we get back to a lower inflation level. Markets like that leak. So that's something, obviously, I'm out of my lane and speculating on that, but focusing on the uranium sector. Looks beautiful and everything that I'm seeing here. So I'm happy to see a good day today. It's refreshing to see a strong day with some green on the screen. see some reactions across markets is also good to see. And perhaps we've seen enough pain. I don't know. We didn't end in capitulation. And really, honestly, if we look at pullbacks, significant corrections of this magnitude in the past, they don't always end in a fearful high volume flush. Not every time. About half the time it ends in that. So it isn't guaranteed every time that we see gaps filling from 3 years ago, that we see double, triple daily volume capitulation at the bottoms with a big panicked, fearful flush. Doesn't have to happen. Will it happen? It might, but it doesn't have to. Definitely doesn't have to. So either way, hopefully we'll see some basing here and some stabilization across the uranium markets as far as the shares go, and a continuation of positive movement in the U3O8 price. Going forward, things look pretty rosy here for the most part, at least if we look out mid and long term. And even in the short term, nice to see some recovery today. All right, hope you have a great day. I will see you again tomorrow. Cheers.